Hi, this is Michael, the lead analyst at Binarium. In this video, we will discuss what chart period and expiration time mean in the context of trading. We'll talk about the analysis methods that can be used on different chart periods. Additionally, we'll find out how to determine the correct chart period based on the expiration time to identify entry points effectively. Let's start with the chart period. The chart period is the time interval during which the price movement of an asset is analyzed. It determines how frequently prices are updated on the chart. Chart periods can vary in duration. For example, on the Binarium platform, they range from 1 minute to 1 day. It's important to understand that the choice of chart period is closely related to the selection of the expirational time and depends on the trader's strategy. For short-term trading, traders often use chart periods up to 5 minutes. Such periods are suitable for analyzing price activity over short frames. They enable traders to identify short-term movements and quickly respond to market changes. Chart periods such as 15 minutes, 30 minutes, 4 hours, and 1 day are suitable for medium and long-term trading. These periods allow traders to see a broader picture of price movement and reduce the risk of volatility. What chart periods do you trade on and why? Share your thoughts in the comments. In the Binarium trading terminal, you will find all the chart periods you may need for the market analysis and trading. The chart period selection menu is located in the bottom right corner of the terminal. Please note that for effective technical analysis, it's advisable to use multiple chart periods. For instance, a larger period can be suitable for determining the overall market direction, while a smaller one can be used for more precise entry point identification. Let's move on to expirational time. Expiration is the moment when the trade's duration expires, after which it automatically closes. In other words, it's the moment when the trader finds out whether they have made a profit or not. On the Binarium platform, you can see the expirational time from 1 minute to 3 months. Depending on the strategy. The choice of expiration time also depends on the volatility of the asset and the trader's personal preferences. Moreover, expiration is an important reference point for selecting the chart period. If you prefer trades with specific expiration times, such as up to 5 minutes, 1 day, 1 week, and so on, it's important to choose a chart period that provides you with all the necessary data for technical analysis and decision making in trading. Exactly, you're opening the trades with the expiration times up to 5 minutes, it's advisable you choose a chart period of up to 30 minutes. In this case, it's also recommended to use support levels. As you can see, I just opened a trade for an increase near the support level. Let's take a closer look at the situation. Since our trade has an expiration time of up to 5 minutes, I've chosen a 15 minutes chart period for analyzing the chart and entering the market. The 15-minute chart provides us with the necessary information to identify a good entry point. I notice that the price chart is quite volatile and there is a high probability of a reversal from the support level in a short period. The situation indicates that the price is likely to continue within the existing trade range. That's why the trade was opened for an increase. Soon as the period of holding in the position ends, expiration occurs. That is, the trade is closed. If you prefer trading with a longer expiration time, then it's better to choose a 30-minute chart period. So, in the right corner of the terminal, select the 30-minute period. Notice that the chart becomes stretched out. This gives us more signals. For example, we can see the continuation patterns and reversal patterns. Additionally, the moving averages indicator indicates that the chart is trending upwards. On this chart, we can observe a head and shoulder pattern. In this case, the pattern indicates the readiness of the price to reverse and continue upwards. Therefore, I opened a trade for an increase. Additionally, the moving averages indicator indicates that the chart is trending upwards. Meanwhile, the price chart confidentiality broke and the local maximum. The forecast for an increase has met expectations. We are locking in the profit. Let's consider long-term trades. If you're willing to hold a trade for half a day or an entire trading session, it's better to use a 4-hour period. In this period, you can identify long-term trends and trade accordingly to the buy and hold principle. The alligator trend indicator will be useful for chart analysis. In this case, the intertwining of the indicator lines indicated that the chart was in the sideways trend, while the expansion of the lines hinted that the price was ready to continue rising. For more information about the alligator trend indicator, please check out our channel. You can find the video by the check-in link in the top right corner of the screen. And finally, the one-day period is best used for evaluating overall trading situation. Now, let's summarize. To find entry points, traders analyze from larger to smaller. A larger period is used to analyze the overall picture, while a smaller one is used for market entry. If you're opening trades with a minimum period, then we use support and resistance levels. If we're trading within the trade, then we use technical analysis patterns and trend indicators. For speculative trading, we use periods up to 15 minutes, and for trading within the trading session, we choose periods of 30 minutes or 4 hours. Overall, by setting a specific period and expiration time, we choose the trading style that suits you best. That's all for now. Don't forget to like and subscribe to our channel, and if you have any questions, feel free to ask them in the comments. Wishing you a very profitable trading.